Okay, we're live. Good morning. Today it's Friday, the 7th of March, and welcome to another episode of the Crypto Hour. So there's a lot been going on during these past 2 weeks, as you might have been aware from the news, the latest news even from this morning coming from Gingerman. Yeah, what I wanted to try to do this morning, try to unpack really what's behind it, what it really means. Because as usual, um, the way that the now politics seems to be done, through Twitter and social media, um, has changed the way that the things are communicated, but the background is still the same. So let's try and understand what's going on, and then we start as usual from the first of all the economic news and what's in store in the next few hours and days, and then we look at why Donald Trump is doing all these things that kind of like have shocked the whole world and getting into like almost like fist fights with his closest neighbors and allies. Okay, let's have a look. Let me share my screen. If I can close these. Sorry. Let's start with the economic calendar. So from this week, the main things that we have seen has been yesterday the European interest rate, which has come down by 0.25%. So that is down from 2.9 to 2.65%. So it's come down considerably in the past few months. Although if you can see here on the left, we still have the UK, US, and Australia, and especially they still have rates above 4%. But the other countries now are kind of like markedly below the 4% rate to start trying to stimulate the economy again. In terms of news, we talk about later about Donald Trump and his crypto summit that's going on today. But there's another important economic announcement today, which is the non-farm payroll. You might know them as NFP, and the kind of like once a month is like a snapshot of the labor in in the US to see how many jobs are created or destroyed in the American economy, excluding farm related jobs. So this is what they call non-farm payroll or employment change. So this is a 1:30 UK time, so it's going to be released about 8:30 a.m. New York time, and it generally moves the market quite a lot, especially if the result announced is different from what's expected. As you can see, last month we had 143,000 jobs that were added. Expectations this month are 159. Any big difference from this number, then we'll get an immediate readjustment of the market. So what I always say to you guys, I mean, for those of you that are active and actively trade in the market, stay well away at around that time, be in a neutral position, and then let it play out for 15, 20 minutes, and then you can start again. But it's not really a time to gamble, because kind of fortunes can be lost in a few seconds. So let's have a look as well very quickly on next week. Okay, so next week we got inflation on Wednesday from the US, rates announcement from Canada, and so we have another measure of inflation. So we have, first of all, consumer price inflation on Wednesday. On Thursday we have producer price inflation. So both on the consumer side and the producer side. And then GDP from the UK. So those are the main news for next week. So until the next bit of news will be when the US meets to announce kind of new rates, if they're going to change or reduce the rates or keep it the same. But until then, for now, we still remember, so the inflation inflation and jobs are the two main announcements that can move the market while we're waiting for interest rates adjustments, because that's the remit of the Fed, is to keep inflation under control and also make sure that the economy is on an even keel. So, if for example they saw that the economy is turned down, it's turned down, like, and there are more job losses than expected, then that might put pressure on them to reduce interest rates to stimulate the economy, because reducing interest rates is equivalent to easing the monetary policy, which in the past couple of years has been restrictive to try and control inflation. Now the inflation is around, it's getting closer to the ideal range of 2 to 2.5%. Then they can start thinking about reducing rates, although at the moment we're still observing to see what Trump's policies, what kind of effect they will have on markets. Now let's go into Trump's policy. You've all heard about the tariffs that have been announced against Canada and Mexico. Some of them starting to get into effect. Some of them are being kind of like postponed, and with the Canadian president making an announcement that they're applying tariffs to the US as well, and it's been this kind of backwards and forwards, which has been very, very unpleasant, with this threat of tariffs against the Europe and the UK as well. So we'll see what the next months will bring. Let's try and understand why all this is going on. First of all, let me bring this. Okay. So the US is the global reserve currency issuer. Okay, so they generally benefit from running fiscal and current account deficits. Okay, so the fiscal deficits, it means that they spend more money than what they get in taxes, and the current account deficits means that they basically they import more than they export. So what's the result of this? They will have a strong consumer economy because there is always money being pumped into the economy. And then the US consumer then are finding that buying abroad is better for them. So then other countries then export to the US because they got this strong consumer society. And then the US imports more than it exports. It creates a trade deficit. So then what happens is that other countries that export to the US accumulate dollars as foreign reserves after they get paid for their services and goods and services. So these dollars are then recycled back into the US in financial markets. So stocks, the S&P, the Nasdaq, and all the stocks that are listed there, and treasuries. Okay, so bonds issued by the US. So the US then keeps supplying new bonds through fiscal deficits, and it enjoys this constant flow of financial money that supports the stock market. So this is why the stock market in the US has got a higher valuation than anywhere else in the world. Now, what that causes, though, is that leads to the US having a what is called a NIP, net international investment position, which is definitely the difference between the external assets that the US owns outside of the US and the external liabilities, which is what the foreigners own of assets inside the US. So that gap is negative for the US, and Donald Trump doesn't like it. So what does that mean, by the way? If we look at this graph, so this is the from kind of very, very reputable sources from Freddie Mac. Now, what it means is that the US basically owes to countries outside the US about 80% of their GDP. Okay, so this is what the minus 0.8 means, is kind of how much percentage of the GDP they own as part of this. So this is obviously something the Trump administration doesn't like. So they don't like this economic model because it requires the US to constantly lend its consumer strength to the rest of the world and to get in exchange a constant flux of money in financial markets. So this means, according to them, that foreign countries take unfair advantage of the US. So how do they want to change this? So this is what this, you might have heard about the Mar-a-Lago Accord. This is like this resort he owns in the Florida Keys. So first of all, the first step is use tariffs to threaten foreign countries. Okay, so basically saying, well, you can carry on as you are, just not buying from us and selling to us. So you need to sit at the table with us to negotiate. So under their guidance, they then start saying, well, you have to pay for your own defense now, so that we can move some manufacturing jobs to the US. So reversing the policy of the last 40 years of this kind of world order. But at the same time, they know that by doing that, it will stop the flow of money, financial money coming in the US. So what they're saying is that, well, I know that you will be doing that. That will cost you money, but at the same time, we will force you to buy 100-year non-marketable treasuries. So basically, to give them money that you will never get back. Okay, so this is what it means in real words, because you are buying treasuries that you can't sell. So you own dollars, and if the dollars go down, your treasuries go down as well. You see what I'm saying? So it's basically it's a bully tactic in the same way that they're trying to bully Ukraine into selling them their most treasured assets, which are what's underground, all the rare earth resources that Ukraine holds and are very difficult to find across the world. This is why they're fighting over Ukraine so much. They don't care about the Ukrainian people. They just want to have all the resources. This is what all this thing with Zelensky is all about. So this is what they're trying to do. But on the other side, Europe and especially Germany is not standing for it. So you might have heard about announcements now that the new announcements about spending in defense spending from Germany and the UK. So they've just announced that the European Commission will grant 150 billion in loans and exclude an additional 650 billions from the deficit rule from the European countries. So that's basically 800 billion in defense spending that will happen at European level. So this represents about 3% of GDP. So Germany will also relax what they have sort of like a debt break rule on defense spending. So what will stop them from spending about 1% of GDP. So all these extra defense spending will be exempted from the debt rule. So that means that Germany can spend even more on defense. It doesn't stop here. The Germany will also spend 500 billion, half a trillion, in infrastructure over the next 10 years, which is about 1.2% of GDP per year. And on top of this, German states and municipalities will be allowed to run 0.35% of GDP in fiscal deficits on top. So this is absolutely massive. And what it means is that this has caused almost an immediate repricing of bond yield levels in Europe. So have a look at this. Okay, this is the yield on the 10-year German bond. So it's gone all of a sudden from 2.4 to 2.9%. So this is a big jump for German bonds. Okay, so it's massive because they know that now Europe is moving into a period where they are going to be a kind of like a fiscal deficit economy. So that means that they're going to have to issue a lot more bonds. And so for the market to absorb these extra bonds, they're going to have to increase the yields. And so this is why the yields in bonds are increasing, and they're probably going to increase more in Europe. So it's not good news, guys, for all of you that have got mortgages in euros, because the yields are probably going to go up. Even if even as it's funny enough, even if as the interest rates are coming down, the yields on the bonds are what determine the price of the mortgages. So so you might find a situation where the interest rates is coming down, but you're paying more on your mortgages than you were paying before. Okay, so after all this good news, the other from an investor point of view, what could that mean? And this is all very fluid, by the way, because at the moment these tariffs are being threatened, but they haven't been fully applied. Okay, so there have been strong reactions to it, like especially from Canada, that's being very belligerent of after these announcements, saying withdrawing a lot of American products from the shelves, announcing that they're going to stop, for example, supplying energy to the US, a lot of these things. So this is a situation. It's kind of like a lose-lose situation, because obviously if Canada was to retaliate in that way, it means it would cause quite a drop to their GDP, because it's one of the main exports. And at the same time, the US as well will have a lot of the goods that they have included into these tariffs are not really produced in the US in big numbers. So they would have to pay more to import these goods. And then as a result, the consumers in the US will have to pay more to buy the final products. So it's kind of like a bit, at the moment, it's still to be seen what happens, because all these tariffs announcements, I mean, nobody can manage a 25% tariff and just absorb it in their cost. So that needs to be passed on. So at the moment, these tariffs are more like of a threat to get people to negotiate. So we'll see what the negotiation will lead us and what it will really mean. But at the moment, we just have to deal with facts, and this is what we can see in terms of facts. From the other point of view, what does it mean for us as investors? And this is one thing we already talked about. So yields in the EU will, and they already started repricing, but I think they got about another 20% to go at least in terms of yields. But at the same time, of valuations of European stocks as opposed to the US stocks, because if this cycle kind of slows down, because at the moment what the decision by Trump, and this is for the whole world, not just for the US. What has caused is that if we have to go back into reducing the trade between countries, that means that will slow down the velocity of money. Because just think about it, if let's say in an economy there are just making things really simple, there are $10. If everybody keeps, let's say 10 people have got $1 each, if everybody keeps that dollar in their pocket, the GDP on that economy is zero. But if everybody spends that dollar to buy something else, and then the person that gets paid uses that dollar then to buy something else and so on, the same $10 can generate and go around once, twice, three, four times. So that's the velocity of money. The faster that is, and this is what international trade brings, the more economic activity is generated. And what all this will cause is just a slowdown of this cycle. So it will slow down as well of the velocity of money. That would be bad for everybody, not just for the US, not just for the countries that they trade with, but for everybody in general, because the US is such a big part of the world economy. Now, from an economic point of view, this chart is really interesting. So this is the PE ratio, so price earning ratio. And as you know, if you have invested in European and US stocks, you know that this number is a lot higher in the US than it is in Europe. Okay, so if with the price earning ratio, I just make an example. If a company makes 1 billion a year, yeah, and you know that the value of the company in the stock market, when you calculate the amount of shares there are around, the price of the share, let's say is 10 billion, that price earning ratio would be 10, because it's 10 to 1. If it was like 5 billion, that price earning ratio would be 5. Now, there's a big difference. The same company that makes the same profit, okay, would be worth almost like 6 times more in the US than it does in Europe. Okay, so a company that makes 1 billion, for example, will be will be worth, let's say, 1 billion in the EU, but it will be worth 6 billions in the US. Okay, and that ratio over time, see, it's been kind of like on average around 2.5 more in the US than in Europe. But lately, after 2020, it's gone shot for anybody that is invested in American stocks, on the S&P 500, on the Nasdaq. You will know they had some incredible results, going on, year after year over, running at 20% plus. But and as a result, that relationship between US stocks and European stocks have gone sharply up. So we're going to almost like 8 times, over 8 times the P ratio in the US than we had in Europe. Now, this we already had a sharp repricing coming down from 8 to about to below 6, but there is still a way to go from where we are now, about 5.7, to go back to around the 2.5 range. So as an investment, in big numbers, the outside world, outside the EU, outside of the US, is generally underinvested into EU stocks and overinvested into the US. So what could happen, as we see that, like we see already from this repricing in the stock, we because also the Europe will try attract, so we'll issue a lot more bonds. So on the world market, people they invest into these bonds will get back euros, and then they will reinvest the euros in European markets. So this, again, for me, is going another at least 20-25% to go as a repricing towards European stocks than US stocks. So that's meaning that probably in the next year or two, the European stocks might do better than US stocks, and in particular, European banks. They are probably valued at about 50% less than the US counterparts. So this is the general picture that I wanted to show you, that you see behind all this posturing, behind all these attacks that we're seeing by Trump and announcements. This is what it really means and what they are trying to rebalance. But just remember that trying to make things simple. The US economy is being like a consumer like us, living on credit cards, okay, spending money that they don't have, they don't own. So the moment they say, well, actually, you know what, we own too much money, we don't want to pay it back. And it's not the first time they've done this. They've already done this with gold, by the way. So they've stolen all Europeans' gold after the World War that was deposited with the US is never been returned. And they're trying to do the same thing now, saying, "Oh, you know what? We have the strongest army in the world. You want to carry on helping you defend you? It's going to cost you." This is what this is all about. And the reaction. The only thing is that the reaction by Europe and by Germany can put a stop to this bullying, because I think, you know what, you're being very nice to us, but I don't think we need you. I think we can do by ourselves. Now, obviously, nobody wants a war with Russia, but at the same time, we don't want a neighbor like Russia keeping annexing territories and so openly threatening countries that are within their range, because there isn't that much distance between Russia and most countries in Europe that they couldn't reach with their ballistic missiles. So it's a tense situation at the moment. Now, okay, having spoken about this is kind of like a general picture. Let's go back. Let's come back and have a look at crypto and things that have been announced. So there has been kind of like a slight movement tonight. So what do you think happened tonight? And this is like is quite funny. So these candles are 7-minute candles, okay? So in 7 minutes, we've gone from 91,000, 1, 2, 3, 4, 5, 6, 7 candles. So it's 49 minutes. We've gone from 91,000 to 84,000. Yeah. So a drop of almost like, about 8%, 7-8% in less than an hour, and now we've recovered. We're back around 89, so close to 90,000. What do you think happened at midnight UK time? So just roughly about 9 hours ago. It's simply that Donald Trump announced this this executive order for strategic Bitcoin reserve. Okay, and by the way, the week before, when I was away, this is the other thing that happened. So it went from 81,000 to 89. So again, an increase of 10% literally within less than an hour. Okay, so these things at the moment, it's moving more for political announcements than any so more like rumors than anything else. So on this announcement where he said there's going to be like an investment. So this was the rumor was that there was being an investment into US tokens. Okay, and expressly they were mentioned Ethereum. So this is Bitcoin, so it wasn't part of that list. But you're talking about Ethereum, XRP, Solana, and Cardano in particular. So let's have a look at, so just to show you what it means what it meant and how these announcements can move the markets. This is when, so I'll show you what the announcement meant in Bitcoin. Okay, and this is the same announcement in Cardano's. So, and again, a slightly bigger move in Cardano than it was in Bitcoin. So again, in very short period of time, is like a 20% increase. And if you're looking at it, actually, we're looking at it from where it was. I'm looking at the wrong one. Sorry, looking at the wrong. So this is even more dramatic. Okay, it was about 65 cents, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 70 minutes, about an hour. Okay, during the day. So that went up 78%. Okay, so you see, I mean, these are not normal market movements. Okay, they're not normal market movements, but it is the way it is at the moment. So both Cardano, XRP, Solana, all the tokens that were mentioned had quite an increase. Cardano in particular because it was almost like unexpected, but it did move all of these tokens considerably, and it pushed the market back from a downward spiral. So it broke the range that we previously had been in for a while. Let me just go on to maybe go into a daily chart and show you more clearly. So you can see we've been for a couple of weeks into this range. Then we had the sharp drop as we closed below the range, and we went all the way down from 95 to 78,000. So big drop. And then all of a sudden there was that announcement, and boom, again, we've retraced all the way to 95,000. And since then we've been going up and down, playing yo-yo. Now, what does that? And now let's unpack as well what this announcement says. Okay, so first of all, Trump signs executive order for strategic Bitcoin reserve. Okay, really, what did he say? Okay, they said about, yes, they will create a Bitcoin reserve, which is fine. This is a fact. This is what he said. But he also said that so basically the US, as this Bitcoin reserve, what will be comprised of? Will be comprised of the tokens that have been taken from the US because of scam or because of failures. So the US at the moment holds about 198,000 Bitcoin, which represents about 1% of the Bitcoin supply. So in reality, they said that they will only increase this number in a similar way. So in ways that do not cost the taxpayer any money. So what does that mean is only if they they manage to take Bitcoin because of scams. They have been, they've gone through the courts and they are basically taking money from fraudsters. Okay, but they have said that they will not. They also said they will not go on and literally buy Bitcoin in the open market. Okay, the similar thing with the other digital stockpile that they talked about. So again, they will not go out and buy these tokens like the Cardano, the Ethereum, etc., etc. But if they acquire, they will keep it instead of selling. I mean, already the idea that there's 1% of the Bitcoin supply that will not be sold, it's already a very positive news because if let's put it that way, if it was like in the past 4 years, if this amount of Bitcoin had hit the market at once, that would have caused quite a big, large market crash. Okay, so the fact that they're not going to do that is already positive. And the fact there have been, even the idea that there is a positive approach to creating a reserve of whether it's a Bitcoin and other coins, it's talking. So imagine that this is not talking to me and you. They've been already in crypto. They're talking about crypto every week. They're talking to the majority of the American population that have been bombarded. They've been told um, by the news that Bitcoin was a scam, that this electronic currency is used for porn, by terrorists and so on. And instead, it's putting up, the president itself is talking up cryptocurrency. So it puts the cryptocurrency world in a good light in front of all the people that haven't tried it yet. They haven't really had anything to do with cryptocurrency so far, but it's almost like giving them permission to do that now, because the president itself is said that, well, the US is going to have a strategic Bitcoin reserve, even if it's not true. The fact that they are saying it's already a very positive news. This is like an extended post they were saying about talking about the reality of this strategic Bitcoin reserve. Especially, it was like a criticism of when they have sold Bitcoin at previously, and that cost the US taxpayer over 17 billion because they have sold it when it was a much lower price. But they're saying the secretaries of Treasury and Commerce are authorized to develop budget-neutral strategies for acquiring additional Bitcoin. I don't know what that means to you, a budget-neutral strategy, so if they can get Bitcoin for free. So provided that those strategies have no incremental cost on American taxpayer. So I don't know if they're going to open a kind of like a digital piggy bank for people to just give them Bitcoin or what else. But I don't know what these budget-neutral strategies can be from the US. So in addition, the executive establishes a US digital asset stockpile consisting of digital assets other than Bitcoin forfeited in criminal or civil proceedings. So again, we're talking about those assets that we're talking about. So Cardano, Ethereum, XRP, and Solana at the moment. So the purpose of the stockpile is responsible stewardship of the government's digital assets under the Treasury Department. So this again, it's like mumbo jumbo. Nobody knows what that means. It's just a very vague announcement. Okay, so we'll do whatever we think is right. What that is, no idea. So no change in that in the guidance from there. So the other part of news, which is this White House Crypto Summit, which is going on today. So today at 3 p.m. American time, Eastern time, there's going to be a speech by President Trump. So that will be 8 p.m. here in the UK. So about what's that time is it? 9? So about 9 hours from now. So he's already, as I say, Trump has already hinted that the crypto reserve could include Ethereum, XRP, Solana, and Cardano. Now, to be honest with you, there's going to be this summit. So it's going to last about 4 hours. and there's a bunch of people, including Michael Saylor, including the Brian Armstrong, the CEO of Coinbase, and people from Ethereum, people from from crypto in general, whether it's running crypto projects or kind of like big investors, fund managers, and so on. Now, in practicality, this will not achieve anything apart from the announcement. It might say what their intention is, but for anything to happen, it's going to have to come from Congress, okay? Because President Trump doesn't make the laws in the US. It's Congress that makes the laws, and then he signs them in. So the process of going through Congress is a slow one and will take as long as it takes. So just because Trump will say something today, it doesn't mean that it's going to happen like this tomorrow. Okay, but it's still playing into this narrative of talking about crypto in a positive way, that now the government is behind it rather than being against it. So there are kind of like new details about these projects so far. Nothing for definite. So we'll see what comes out of this summit, and there's probably going to be volatility going on today, about in the prices of crypto, because of this, because other what it's like, whatever, if he says one thing or another which is better on or worse than expected, then prices can move very quickly as they did last night, like 10% in a matter of minutes. Other things, and some of them are actually, where is it? Maria. Couple of things are important. And this is much bigger than anything that Trump could announce. This is BlackRock. You all know BlackRock, and this is the manager of the largest of the Bitcoin ETFs, and also being a huge investment company holding trillions of assets in their investment products. What they have said now, they will add the Bitcoin ETF into their model portfolios. Okay, now this is big. This is really big. Okay, the model portfolios is where something that they offer to their customers that they want to invest, but without knowing exactly what to invest in. They offer them, and this is something that the financial advisors are able to offer their customers. They offer them investing in baskets. They are balanced. Okay, so these baskets will own this, will own that, will own a bit of S&P 500, a bit of Nasdaq, and will have a bit on Nvidia, and so on. All these things, and between all these different products that are included in the model portfolio, there's going to be the Bitcoin ETF as well. So this, even people, without people buying directly and going to financial advisor and saying, I want to buy the Bitcoin ETF, even the people that says, well, I want to put some money into a balanced investment basket, will include Bitcoin ETF in it. So in terms, at the moment, the BlackRock model portfolio at the moment is worth about 150 billion. Okay, and they're saying they will allocate between 1% and 2% to Bitcoin, to the Bitcoin ETF. So that will again be between $1.5 and $3 billion. It's not, I would say, something that will change all of a sudden, will make Bitcoin's price skyrocket. But again, these are all like little announcements, that will tell you how the traditional investing world is turning towards crypto and offering, because now they have got a way of making money from it. They offer it to people that were before thinking of leaving the traditional investment world and going into crypto directly. Now they're offering them at least a way of doing that, so they can keep these kind of funds within their control and getting paid for it, rather than losing a big chunk of investable money that it's leaving their world altogether and going to maybe buying Bitcoin directly. So this is kind of like a big announcement that it's expected as well to be followed through by other investment managers, because all of a sudden, if BlackRock is offering that as part of their model portfolio, and people may think, well, I like to have some exposure to, Bitcoin. And what do you think that will do for the other big banks? They have in their financial advisor, and they have kind of model portfolios. Obviously, they will have to include it as well, otherwise they will lose customers. So again, this is 150 billion from BlackRock, probably going to be another 89, 90, 100 billion from other providers that also will allocate similarly to their model portfolios. And let's see, a couple of things. Another thing that came out is, you might have read about El Salvador. President Bukele saying El Salvador will continue accumulating Bitcoin. Now, the one thing that kind of like became obvious is that the IMF, again, unelected International Monetary Fund, in the agreeing to provide 1.4 billion loan to El Salvador, has requested El Salvador to do some things for the Bitcoin. So they asked them to stop buying Bitcoin, dissolve the trust fund that they have created, and also cease operation of its Kivo wallet, Bitcoin wallet system. Okay, and they actually, President Bukele came out publicly and said, all this is not stopping. If it didn't stop when the world ostracized us and most Bitcoiners abandoned us, it won't stop now, and it won't stop in the future. Now, what also came out is that the IMF has also stopped another over 90 countries that are in economic difficulty from following El Salvador's example. So they have told them, if you want our money, you cannot buy any Bitcoin, or you cannot even mine, because they're even asking El Salvador to stop mining Bitcoin. So this is the reason why we haven't seen, other countries follow through what El Salvador has done, simply because they know that they can't do without the loans from the IMF, and if they do that, they will lose those loans. So it tells you a lot about how much the establishment has tried to control cryptocurrencies, and this has gone on for years. So this El Salvador has been really a thorn in their side for quite a few years, and the fact that they refuse to bow to their will, and stop buying Bitcoin. And remember, El Salvador, I know it's not a lot, but they're buying 1 Bitcoin every day on top of what they mine with the free power that they get from volcanoes. They are buying 1 Bitcoin every day, and then now they have accumulated about over 6,000 Bitcoin, which are roughly around 600 million in value. And last but not least, because I think that in this cycle, what we will start seeing the real application of blockchain to the real world. So one of the biggest announcements that probably has gone, unseen by most, is about Cardano. Okay, Cardano partners with Brazil's Serpro to boost blockchain in public sector. So the Serpro is a state-owned IT company to bring blockchain technology to the country's public sector, aiming to modernize its digital infrastructure. So this company is responsible for 90% of Brazil's federal public administration, processes over 33 billion transactions annually. Okay, so what will happen as a result of this? And this is, by the way, Brazil, it leads in digital governance. They ranked second globally by the World Bank for its digital government maturity. So what they're doing, especially with all the work that Cardano has done towards governance, with the new constitution, and probably the only blockchain there has done so much work on governance, they will now integrate in Cardano into their government systems. Okay, so there are over 750 digital solutions and a massive amount of that data across many different platforms. So and also this is not only will be blockchain implementation, but also educating public sector employees through the Cardano Academy. So this again, it's not something that will be overnight, but can you imagine? Can you not imagine how many people work for the public sector? We're talking about hundreds of thousands of people. Again, they will be educated about Cardano, and then kind of start. When you get educated, obviously you start. Some of them, not all of them, some of them will start then also using this in the private license or interacting with Cardano projects. So this is the kind of the start, and this is where kind of like, I would say Charles Hoskinson has been different from the Ethereum guys, for example, always trying to get these connections with institutions, with big companies for real use. And now Cardano's technology, especially the science-based approach, can help improve results for a variety of different uses. So this is, again, quite big in terms of not just Cardano, but how blockchain can integrate with the existing world to improve adoption and also improve the results for like in this case for the administration to especially to improve efficiency and transparency apart from digital education. All right, so I know there's been like a couple of weeks in like less than an hour, but I had a lot to talk about. So let me just now stop sharing. And let's see if there are any questions. Let me first of all bring up the chat and see if there's anything there. Okay, Eric, who keeps those 100-year non-marketable treasure as well? This is what the plan is that they all the countries that trade, they've got like a positive balance against the US, will be required to buy these treasuries. So they can hold them, but they can't sell them. So basically, it's just give us your money. Basically, it's for 100 years. Well, can you imagine, what it will be like in 100 years? Will the dollar be worth anything or not? I mean, that's a big bet, a big ask from the US. Italy will produce drones with Turkey for 100 billion. I kind of missed that. Eric, was that that?
It was in the news yesterday that Italy holds one of the biggest arm company in Europe, and Italy goes together with the big arms company in Turkey and will develop drones worth 100 billion euros or dollars. I've got.
Excellent. Well, good to know. Good to know that Italy is doing something good. This hasn't been that positive in the news. I mean, to be honest with you, I mean, if you guys had one of the biggest success stories of investing this year have been like European defense companies. There's a couple of German companies that have done extremely well out of this, and this is even before Trump got elected. The shift has already started. So yeah, Bradley, given the Trump announcement that includes Cardano and Brazil support in it, would it be a good time to invest in Cardano? And this is no financial advice. You know that we are very bullish about Cardano, and I personally have been now for the past over 5 years, and got Jonathan here in the community that is a Cardano Jonathan, sorry, I got a blank. Stake pool operator. So we always talk well about Cardano, and personally, Cardano is part of my my long-term portfolio. So it is like at the base level, together with Bitcoin and a few others, and I've got no intention of parting with it at the moment, especially not at the current price. So it will have to grow considerably before I even thought about liquidating some of it. Okay. Guys, anybody wants to ask a question? You can either do it unmuting yourself and asking questions, or I'll put you in the chat box. Let's say there's one from Matteo. Is there a good source of the kind of information you give us every week during the crypto hour? Do you collect it from multiple sources? Yes, there's lots of different sources. Some of that. So the first part was talking about macroeconomics. So that's particular interest I have because it's what I've studied as well. But the different is not like just one source. There's several. And for crypto, probably the best place to start would be CryptoPanic.com, which is more like a almost like a Reuters of crypto. So there are all the news are mentioned, and then you can click on it and then just go and link to the article and go and read the article or the video or whatever it is. Now, there is a proviso though, that everything is listed. It's CryptoPanic.com. I'll post it here. CryptoPanic. So that's the site. So everything is listed there. So not everything that is listed there is true. So you need to apply a filter and see what is worth reading and what is just absolutely rubbish. Like people saying, well, like according to my analysis, Bitcoin should hit 500,000 by next Tuesday. Obviously there's lots of that as well in there. So you need to be careful about what you read. But that's the place where you can at least read a lot of news, and also Twitter. Twitter is really good for the speed. So once you start putting crypto as your interest, you start seeing everything and start joining some of the top posters about crypto. Then anything that happens, you probably read about it on Twitter first, because Twitter is where it comes out. Then people pick it up and publish an article that will take a few hours generally, and you then find your crypto or crypto.com. Yeah, it's I must say it's not a fast read, Matteo. So it's not like going somewhere in 5 minutes and thinking, knowing everything that goes on about crypto. It takes a bit of digging. But if you want, those are the two places where I would suggest you can start looking. About macroeconomics is a bit more complicated because it goes a lot more in depth, and it's not that easy to just go and understand what's behind these things. Yeah, very true. Very true. Just be, as usual, whenever you are looking for information, the quality of the information you get is related to the quality of the questions you ask. So the better, the more you understand, the better questions you ask and the better information you get back. So if you start doing that, then just be ready that it's going to be a process. It's not going to be like, yes, I'll do that and I'll get everything I need. It's as soon as you start understanding more, you manage to focus your questions a lot better and get better information as a result. But definitely AI, it does help a lot in the search for information of any sort, Twitter or not. Okay. Any other questions, guys? Anybody else? No, nobody else? Okay, guys, if there are no more questions, then we'll stop the call here in a minute. I just remind you, Jonathan, are you running your Cardano session after this? So if you please, yeah. So Jonathan just posted the link in the chat. So obviously, as I said before, for those of you, I mean, most of you already know Jonathan by now, but for those of you that are new and don't, Jonathan is a Cardano, apart from being a member of the community. is a Cardano stake pool operator, so is really into the nitty-gritty of what it means to run a blockchain. And so it's a really good place to start understanding how a blockchain works. And obviously it's mainly we'll talk about Cardano, how you do things in Cardano, but if you're interested in other community, there are similar sessions in other community as well, if you want. But at least you'll get an idea. If you understand how things work in Cardano, then it's a small step to then transfer that understanding and knowledge into different ecosystems as well. All right, so I'll just I'll give you a few more seconds to hopefully click on that link and go and join Jonathan. For us, I'll be seeing you next week, the same time. Remember, this session is always at the same time. Next week, before this session, I'll be running the long-term investing session for the community. And remember, I remind you again, that is alternate weeks. 1 week is 8 a.m. UK time, and 1 week is 7 p.m. UK time. Okay, like last night it was for me in the evening, but you guys in Australia would have been early morning. And next week instead is going to be like my morning and your evening in Australia. Okay, so have a fantastic weekend. Keep an eye on the news today, because probably going to be like both. I remind you, Trump talking at this digital summit, crypto summit they're having in Washington, and at the same time we got the non-farm payrolls at 8:30 a.m. Okay, so between I'll say US time during the whole session, because I think Trump is talking at 3 p.m. Eastern time. So during the whole session from 5 hours from now, roughly, until whatever 12 hours from now, a lot might be going on, and we might seeing a lot of volatility as well. Okay, so if you're in the market, do watch what's going on, and avoid entering big positions today if you're not fully covered. Okay, so I will see you. Have a great weekend, and I will see you again next Friday.
Thank you very much,
Bye,
Luca.
everyone.
Thank you.
Bye-bye.